One question we always ask is, will there be a bifurcation between the crypto and the fiat markets, right? We've been running very, sort of in parallel to the stock markets and the price of stocks, or, stonks, as some people might like to refer to them. Um, do you think that we will start to separate in that environment, or do you think the tech stocks will also start going up in conjunction and in aligned with the
Yeah, look, I
recovery?
really hope so. And that needs to be the aim of all of the innovators in this space. Because right now, most people just lump
Yeah,
stocks and crypto into a big basket of quote unquote risky assets. And what I'm really excited about for the
yeah,
bear market is that
exactly.
there's less mom and pop investors
Yeah,
coming into this space, which means that devs are not developing effectively junk protocols to try and extract investments from these people who want overnight returns. And instead,
yeah,
if these investors aren't coming in, they can focus on developing real utility. And so my hope is over the next 2 years, we're going to see an acceleration of innovation in the space so that next time the bull market comes, we'll see a lot more innovative, sustainable, long term protocols emerging. And if during the next bull market we can demonstrate in the crypto space that we have really interesting, innovative, reliable products and reliable services, then I think the decoupling will occur. But I don't see a decoupling occurring before the next bull run.
yeah. I mean, I sort of tend to, mentally agree, of the $33 trillion that were printed over the last couple of years by these governments. Somebody was saying that 95% of that went into, the stock markets, right, and the financial instruments and financial products. So actually, it sort of defeated the whole purpose in terms of building out new infrastructure, getting the economy ready for a greater future, investing in R&D, new product innovation, and stuff like that. It went into stocks, bonds, and ultimately into crypto. And as we see that retraction that came out, and like you mentioned, there's a risk capital allocation of that 33 trillion that goes into that market, e.g. tech stocks, crypto assets, and that is now being pulled out, right? Where do you pull first? You
Exactly.
pull in those risk class assets, and that's why you're seeing tech stocks go down, crypto go down, and then oil and all those other companies go up, right? I mean, and there's a reason for that, right? Anyway, because they've been suffering in this downturn, where the tech has been going up in this flush market. Sorry, not downturn. But that sort of leads me to another element, right? Where I think I noticed, sort of you're talking about longer term protocols that are building more sustainable products that are committed to this industry and to really build out protocols that have longevity, really, right? And one of those protocols is really interesting and that have been around for a long time and have continued to innovate.
Mm.
Is Bancor, right? And I know that's sort of something that you tend to write quite a lot about. And one of the things that I thought was really interesting, their innovation. I mean, they've innovated a lot in terms of AMMs, in terms of trying to change AMMs and innovate in automated market makers, by the way, for those that don't know what AMM is. But they've also built out this in V3, this impermanent loss protection, right? Which was a really interesting element associated with AMM.